Good morning, everybody. Hopefully you all can hear me, and I quite enjoyed the mass exodus from the room as I took to the stage. Clearly residential isn't the most in vogue conversation for us all to have today, but thanks to Peter. I think it's a fantastic scene setter for me today to talk about the residential land market and in particular urban regeneration. So firstly, my thanks to Nella, Lucy and the South Coast Commercial Property team for inviting me to speak today. My name's Jack Tompkins. I'm an associate in the Strategic Development Consulting team at JLL, which is a bit of a mouthful, and if many of you are sat there thinking, what on earth is a Strategic Development Consulting team, I shall do my best to explain. Essentially, our role is to embed ourselves early on long-term strategic projects. Typically, they're high-profile regeneration schemes that we're working on across the UK. Our team is based in London and led by Katie Kopek, and we're currently acting for Chichester Council, Winchester, Basingstoke in helping them bring forward pretty significant regen projects. Nationally, we're advising Delancey at Earls Court, British Land at Canada Water, Network Rail and Homes England at York Central, and Arden Cross Limited for the Arden Cross site. So we're doing quite a bit nationally, which begs the question, why on earth am I here when we've got that sort of national focus? Whilst our team is based in London, my base is more accurately described as my dining room in Emsworth. So I'm a South Coast boy. I was born in Bognor Regis, although of course in a professional environment I tell people it was Chichester. So hopefully that's brought me a bit of credibility with you all. And today I'd really like to talk about four key topics. Firstly, a look at some of the key residential trends that we're seeing in a post-pandemic world. And I've also been given the green light by our research team to share some of our residential forecasts, which are due to be released a little bit later on today. Secondly, let's have a look at some of the issues that are affecting land values across the South Coast. And then we'll look ahead at the role that residential is going to play in our town centres, not just in our economic recovery, but also setting our long-term identity for the future, before giving us some key considerations for us all to think about and take away from today. So without further ado, let's have a look at some of the post-COVID shifts that we've seen in the market. And for those of you that have been bored enough to read my blurb in today's brochure, you'll have seen that back in May 2020, as the housing market reopened, I found myself in the unenviable position of having agreed a sale and purchase in a pre-pandemic world, and then be thinking about what on earth I was going to do as we came out of and the market reopened. The Bank of England had predicted that prices were going to fall by 16%. JLL and Savills, of course we are the oracle, we know everything, predicted that transactions were going to halve to under 600,000. And of course 12 months later, prices had surged by 9.5%. Transactions were up to 940,000 transactions in a year, so we're all completely wrong. We couldn't have guessed just how resilient the residential market was going to be. So why has that been? I mean, COVID typically has triggered a boost in demand for rural living, which has driven a quite amazing house price growth in our small towns and villages. Pandemic, I think, has reframed the criteria that we had for living, and it's re-emphasised our desire to be in vibrant, social and attractive communities. And this has led to really good house price growth across most of our key conurbations. And you'll see in the top left graphic there, Bournemouth, 8.5% leading the way from May 20 to May 21. Winchester at 7.4%. Portsmouth at 7.6% and Brighton at 8%. Now I've excluded Southampton, who sadly were down at 3%, but that's still a respectable growth rate for residential house prices, certainly in the past 12 months. However, one of the things I was keen to look at is the comparatives against England and indeed Bristol. Bristol, I always think, is a great regional comparison for probably where we should be trying to get to in terms of not just residential, but graduate retention, bustling business community, etc., etc. And you can see that Bristol is there at 9.1% against the England average of 9% too. So we've still got a little bit of work to do. The story is similar when we look at transactions in the bottom left-hand corner there. So in 2019, the kind of last year on record, but in a pre-pandemic world, we were about, in the southeast this is, 140,000 transactions or 11,500 transactions a month in the residential market. As the pandemic hit, that fell down to 120,000, so 10,000 units a month, but we've had a really quite staggering recovery to the point where actually we're up at now 145,000 transactions from May 20 to May 21, and for the data that's available so far, we're running at about 13,500 transactions a month, which is fantastic news. So the private sale market, it's in a good place, and on the top right, you can see some of the residential predictions that I mentioned earlier on, and the forecasts show that there is still consistent mid-term growth in the resi sector. There'll probably be a bit of a bump as we approach 2024 and the election looms upon us, but on the whole we can see growth of between sort of 4 and 5% per annum. There's similar consistent growth anticipated in rental levels, which you can see in that in the graph below, and we'll discuss a little bit more later on about what that might mean for us on the south coast. And all of this is set against a pretty good economic backdrop, with GDP growth sharply recovering, hopefully over the next 24 months, and then consistent growth beyond 2023, with a fall in unemployment figures too. So the picture's pretty good. So what does all this mean? Firstly, we expect there to be that strong house price growth that I've talked about in major cities in the next 5 years. And generally, we're expecting that to be driven by that spike in home ownership that we've had over the past 12 months to 18 months, with people looking at high wage growth because of the good economy, decent house price equity that's been growing in that time, and still we've got historically low access to historically low mortgage rates too. But for the cities to bounce back in that way, we need to make sure we provide all the elements of the community and the vibrant space that we're looking for within our city. So a combination of green spaces, outdoor markets, shops, cafes, and community. The second theme is that the consistent and low risk growth in rents is creating a really fertile investment market. And I'll talk a little bit more later on about the potential of our rented sector. And finally, and this is not a groundbreaking finding by any means, but we're in a really good place. Residentially, we've got a really solid foundation to build upon. So moving ahead to look at land value, and whilst that end user picture is pretty rosy, it's been a little bit more challenging time in the land market. And I'll dive a little deeper in 4 key areas here, which is values, cost, finance, and the land pipeline. Let's look at value to begin with, and as I discussed on the previous slide, we've got that consistent house price growth across the region, and in the land market, it's becoming increasingly competitive, particularly from affordable housing providers, which is fantastic news. But the fundamental issue remains that the traditional build and sell market is only going to build as many homes as we can sell. So in the bottom left-hand corner there, you can see an article from the Times, which talks about Goldman Sachs' interest in the UK home rental sector. And there is a wall of capital waiting to hit the UK for the UK rental market. And again, we'll dive a little bit deeper on that later on. On the cost side of things, it's been an altogether more turbulent time, as has been well publicised, and I think that's principally down to global supply chain issues. The most compelling example of this is shown in the 2 sort of maps on the right-hand side that you can see here. So China is the world's largest producer of steel and cement, producing 54% of the globe's supply of cement and 56% of steel. India, by comparison, is the second largest producer, producing 5% and 8% respectively. So China's doing an awful lot for us. The image in the top right is Shanghai Port, the busiest port in the world, doing 42 million containers per year. And this is an image from June 2021. Every green dot you can see on the map is a moored container ship outside of Shanghai. By comparison, the second image below is the London Gateway. And if you can spot any of the green dots on there, well done you. Your eyesight's better than mine. This logjam of containers has caused a huge price increase in shipping costs. To ship a container from Shanghai to Rotterdam in 2020 would have cost you $1,650. In June 2021, that price was $11,196. So an enormous change in build costs, and that is putting huge pressure on viability and land values across the board, and we do hope that begins to even out as we move away from some of the issues that's been caused by. In finance, the key threat on the horizon from my financial perspective is the end of Help to Buy in 2023, or as I recently heard a developer describe it, Help to Sell. There have been around 350,000 transactions since 2013 that have utilised the equity loan. So let's say we're talking about 40,000 transactions a year. That's a decent amount of transactions to be losing from the market. I raise a slight eyebrow as to whether how many people wouldn't have bought a house anyway, Help to Buy, but we can talk about that another time. In the bottom right there, you'll see that there is going to be a rise in availability of green finance and mortgages. In 2020, sorry, I've dived slightly ahead on my notes there. Last year alone, there's been 5 new entrants into the green mortgage market, so we've now got 14 in total. You compare that to pre-pandemic, where we only had 3 green mortgage lenders. And then finally, in addition to the investment capital flowing into the resi sector, in 2020, around 22% of all commercial real estate investment in the UK was in the resi sector. If you compare that to the US, where the build-to-rent market alone accounts for 30% of overall investment, the market has huge potential, probably potential to grow about tenfold if we achieve US levels of market penetration in the resi sector. And the final piece of the puzzle is land value and land itself. We're not making any more of it, and if we're going to hit the government's target of 300,000 homes a year, we need to have a really honest conversation about what land is available. Only 7% of UK land is built upon, and around 93% of the rest of it is designated as agricultural land, national parks, or areas of outstanding natural beauty. So to hit 300,000 homes a year, we really need to reinvent our town centres. We need to make them fit, purposeful and relevant for 21st century living. And we've got to do that through high quality, sustainable buildings in vibrant and thriving mixed use areas. So what does that mean for the South Coast? This map is an overview of the key regeneration projects that are happening in the South as we speak. And they're predominantly led by Resi because of the strength in the market, but they're all mixed use schemes. So hopefully we're tilting at creating those vibrant communities that we're looking for. You can see down in Portsmouth, out for local plan consultation at the moment is the Portsmouth City Centre Master Plan, which proposes 6,128 new homes alongside 1 million square foot of commercial and community uses. Chichester, for some time, their Southern Gateway scheme is led by 365 new homes alongside 200,000 square foot of commercial and community use. And in Basingstoke, we're in the early stages of feasibility on their town centre strategy that includes 1,500 new homes and around 700,000 square foot of commercial and community space. Really looking forward to hearing from Southampton Council later on today about Mayflower Quarter. The first phase is proposed for about 275 new homes alongside 70,000 square foot of commercial. It's an enormous space, Mayflower Quarter, and I haven't yet managed to find what the numbers are, but I would anticipate we're talking in the thousands again comfortably for what Mayflower Quarter would be able to provide over the long term. In Winchester, the central Winchester regeneration site is the subject of an adopted SPD, allowing for up to 310,000 square foot of residential alongside 234,000 square foot of commercial. If we break that back in the residential aspect, we're talking about a few hundred units there at least. BCP for some time have had an adopted policy of residential in urban locations, and way back to 2013 there was 1,500 to 2,000 new homes planned. Read with interest in the brochure today that we're talking about 3,500 potentially on top of that as we look forward. And finally, last but not least, Gosport, who have identified 7, generally speaking, former DIO sites and MOD sites, and there's allocations in there that are emerging in their local plan, which is currently out for consultation, on about 2,600 new homes. So with just these schemes alone, we could potentially have capacity for 20,000 new homes in urban locations along the coast. When you consider that of the 140 or so thousand transactions in the southeast that I mentioned earlier on, only 7,500 of those a year are new home sales, with most of those presumably being focused on estate-style housing, it's clear that the traditional build and sell model is going to need some support to try and deliver on these homes. So, how are we going to do that? First and foremost, it's really important to say that Resi is only part of the equation. If we're to create centres that genuinely entice people in, Resi needs to be part of the solution, not the solution. The answer lies in diversity, and we need a greater diversity of homes to see a greater variety of end user needs. We need to move away from the concept of blanket home ownership and use measures to increase total supply rather than demand for private housing. By 2029, it's estimated that 25% of the South Coast population from Brighton to Bournemouth will be over the age of 65. So first and foremost, we need to provide attractive, specialist, later living housing to help free up family homes and make more efficient use of existing stock. It's estimated there's about £1.7 trillion worth of latent equity built up in the hands of the over 65s in their homes. And as a reflection of that, we must also get our offering right for younger people. The Southern Policy Centre did some excellent work a few years ago about our graduate retention on the South Coast, and we need to ensure that our urban centres provide the right alchemy of live, work and play to keep talent on the South Coast. And the two top sectors in this graphic dovetail very neatly with the conversation around sustainability in the middle of the slide there. There are a myriad of different factors that we need to consider when trying to achieve net zero carbon, but in a regeneration sense, we really need to look over a long-term time frame. In the broadest terms, we need to look at the amount of time it's going to take a modern building to achieve operational carbon savings that are going to be equivalent to that of the embodied carbon that are in most of our brownfield sites at the moment. To do that, the average homeowner, for example, is not going to retrofit their home to BREEAM Excellent. It's going to take long-term, patient, institutional capital and affordable providers who have the opportunity to make a real impact here because they're in it for the long term and they're looking to make a real difference, not only in their own targets as a business, but also to the net zero carbon agenda. LNG are a great example of that. In 2020, they announced they intend to expand their build-to-rent offer by 1,000 rental homes per year from 2024. And finally, there's the key question of who. Who's going to pull all the strings to deliver all of these homes? The vast majority of these opportunities currently sit in the hands of our local authorities, but typically speaking, they're going to need expertise, resource, capital. Land alone and land ownership alone isn't going to do the job for us. So it raises the question, where are Homes England going to fall into all of this? The rumblings that we hear is that the buzzword within Homes England is a full sort of U-turn from the Homes and Community Agency days to be talking about regeneration and how they're going to support us. The question still remains, are they going to bring capital, expertise, or both? We wait and see. And finally, there's all of us in this room. Our ability to have oversight across all of these opportunities is going to be paramount to our success across the coast. We need to provide innovative and forward-thinking solutions to deliver diverse partnerships, products and providers, and ensure that the South Coast is a great place to live for future generations to come. That's it from me.
Thank you.